And have a listen to this. Have a listen to this.
Interest rates are higher, and people don't like that, but you should be welcoming a stronger economy.
And maybe a deal has a point about the machinery of capitalism being oiled with the blood of the
The
workers.
United States is a country that has always paid all of its bills.
Lannister always pays his debts.
Don't let the bastards get you.
Hello and welcome to Comedian versus Economist. We demystify the world of money and help you get a handle on the bigger picture. My name's Adam and we're joined as always by my little older brother and real-life economist, Thomas. Hi, Thomas.
Yeah, g'day, Adam. How you going?
Doing very well, thank you. Look, I know we promised last week that we'd get to some listener emails this week. Well, I am here this week to promise that we'll definitely get to them next week. I promise. We have actually got tons of emails coming in, which we love. So what we'll do is we'll dedicate a big chunk of next week's show to covering off as many as we can. So apologies for our broken promise, but please accept our promise for next week. Thomas, massive show coming up. We want Nickelback, said nobody ever except JP Morgan. They want their nickel back after someone stole their nickel, or did they? Should you trade based on what you heard? Possibly not. Thanks to IG this week, we'll be looking at herd behaviour when it comes to trading. Perhaps it's not all just about listening. And to quote an old bingo host that I knew, dinner for two, 69. Korea are pushing for a 69-hour work week. We'll look at why on earth that makes sense. But first, Thomas, it appears that the US Fed thought the banking sector may be bluffing with its crisis play and has raised rates again. Thomas, what's going on? Is it a double bluff? Or is the Fed holding a full house?
I really don't know what to make of that metaphor. I find it I don't know how to translate that into what's happening in financial markets. But so I'm just going to just park that and just say, yeah, that's right, Adam. The Fed hiked rates. That's.
So they hiked rates, but the banking crisis is still going on, isn't it? Like I think I saw another bank that was in trouble.
Yeah.
So is this responsible from the Fed to be hiking rates while there's a banking crisis? Or are they sort of just turning a blind eye to the banking crisis?
They're in a funny bind because if they didn't hike rates, so they've been saying we've got to hike. People, before the banking crisis, people were expecting it was either 50 or 25 basis points. In the end, we got 25. But like rate hikes were definitely on the cards. Then the banking crisis happened and everyone's like, oh, maybe the Fed will pause. But if the Fed pauses at that point, they're kind of saying, yeah, we don't think the financial system's strong enough to handle another 25 basis points. That's a fairly strong message to send, and one that's probably not going to be interpreted well.
Like any responsible person, right, would just pause, wouldn't they, and take a breath. You just go, well, let's just pause. But is it just the danger of the perception here? Like that's what they're worried about?
I think so, because it would say, like, if they said the only thing that's changed since everyone was betting on 25 or 50 is that we've had banking sector wobbles, which you know, and the official line is it's all okay. It's some isolated banks. It's not a systemic problem. The American economic machine is in rude health. It's all fine.
Yeah.
So to say then that we're not raising rates because of the financial system, one says that the American financial, economic machine is not okay. It can't handle another 25 basis points. And it also says the banks, we're worried about the banks. The banks can't handle another 25 basis points. And so if you're worried about a run on the banks and more collapses of small and regional lenders, that's exactly the message you don't want to send.
I did read an article today that said that nearly $100 billion in deposits have been pulled from banks, right, in the last little while. I don't know what it was, maybe the last week or so. So maybe the Fed saw that and they were like, well, people have taken all their money out, which means they've still got money. so we'll raise rates because obviously they've got money to pay for higher rates with. They just don't know where to put their money. That's the problem. That's for someone else to solve. That's not the Fed's problem.
Yeah. Yeah, maybe. I mean, one of the reasons people thought the Fed might pause is because banks are pulling their heads in. So banks across the financial system, everyone's in a bit of trouble. Everyone's reining back. They're tightening lending standards. They're not lending to borrowers that they might have lent to previously, and so you call this financial conditions. And so there's been a tightening of financial conditions. And people asked Jerome Powell how much of a factor he thought that was. And he said, yes, we are seeing a tightening of financial conditions. I reckon it's worth about 25 basis points, maybe a bit more.
How convenient. Of course he's going to say that. We've done the maths, we've crunched the numbers, and it's exactly what we forecasted. Who would have thought? Right. So where does this leave us then? How's our Goldilocks? How's our soft landing? Whatever you want to call it, looking?
Yeah. Well, they asked him about this in the press conference, and he says, "I think that pathway still exists, and we're certainly trying to find it." We're doing our best.
We're trying to find it. Imagine if this was a plane, right? And we're trying to land on a narrow runway, and people are like, "How's our landing looking on the narrow runway?" And they're like, "Well, it's looking pretty good. We're still in good shape. We're still just trying to find the runway." But once we find it, we're pretty confident that no matter how narrow it is, we're going to land this baby.
Yeah, that's right. So I mean, there is a weird disconnect. So the Fed's still talking about this soft landing. Equities are still pricing in a soft landing. So equities don't seem like they're, the stock market share prices don't seem like they're priced for a recession. They seem to be backing a soft landing as well. The bond market, on the other hand, has gone from pricing in rate hikes to now pricing in 75 basis points worth of cuts in the second half of the year.
Right.
So there's only 6 months in the second half of the year. So that means a rate cut every second month between.
Even I know that.
Yeah, right. Yeah. But they're talking about like by the end of the year, 75 basis points, 3 rate cuts. So bond markets think they're pricing in recession and pricing in recession early. So that's a bit of a hard landing scenario. So there's an interesting mismatch there between what bonds are pricing and what stocks are pricing.
And does this just mean that we in Australia we're going to get whatever outcome happens in the US? I mean, are we just tracking the same course, or is it a different story for us?
Well, we've got exactly the same bind that the Fed had, because now you've had. In the week, 2 weeks ago, the ECB hiked rates 50 basis points and said, it's okay, we think the financial system can hack it. The US last week hiked 25 basis points and said, it's okay, we think the financial system can hack it. If the RBA then says, yeah, we're going to keep rates on hold because we don't think the financial system can hack it. That would destroy Aussie banks. Like that would be a catastrophic scenario. So if they were to hold, and the meeting's next week, say April 4th. So if they were to hold, they'd really have to come out and really explain to people why it wasn't a panic about the banking sector, because the RBA through APRA, they used to be part of the same organisation, but they got separated, but they're still pretty connected. So they've got direct insight into the banks. So it's a bit like the bank regulator coming out and saying, "Oh, don't think the banks are really up for a 25 basis points."
I mean, mortgage holders definitely are. We are. If I could speak on behalf of mortgage holders, we are definitely up for a 25 basis point swing down. I'd go with cuts even. I'm out there. I'll put it out there saying that I'm on board with cuts if anyone wants those.
Yeah. Well, you and the bond market. Just
me and Bondi, we're close. All right, Thomas. More shenanigans. Dare I say more? I don't know when the last shenanigans were in the nickel market, but more shenanigans in the nickel market. What's going on?
Yeah. No, it's more because last year there was a short squeeze in the nickel market, and the whole nickel market had to be sort of shut down for a bit, and then it's still on reduced trading hours. So it still hasn't sorted out. And the London Metal Exchange, which is where, it's one of the biggest commodity trading houses in the world, exchanges in the world, they're still trading nickel on reduced hours. So it's kind of like,
is that a successful control? Reduced hours? Like, are people who are interested in trading nickel going to make a trade and going, what? Closed? Oh well. I guess I won't make this $73 million nickel trade then.
I won't panic dump my nickel because it's after 4:30. I don't know. Yeah, so nickel's been a world of weird for about a year.
Just the nickel market's on lighter duties.
Yeah,
it's just like
that's right. It's on some mental health leave. Yeah.
Wow.
Yeah, so then last week the London Metals Exchange announced that it had cancelled 9 nickel contracts worth $1.3 million after discovering, quote, irregularities at a warehouse. But basically what they found is that what they thought was nickel was actually just bags of stones.
Oh, the old switcheroo.
Oh, yeah.
Who would have thought? Certainly the London Metals Exchange wasn't thinking about the switcheroo.
Oh, the old switcheroo, yeah.
Someone switched out nickel for stones.
Yeah, so the London Metals Exchange has a network of storage warehouses, which they don't own but are run by third parties. This one was run by Access World.
Yeah.
I don't know, maybe they shouldn't be giving the world access to the nickel, but... yeah. So there's this network of warehouses, and and then they found that there's this one warehouse in Rotterdam just didn't have the nickel that they thought it had. And
I think something similar happened with gold a while back, didn't it? Didn't people were trading tungsten wrapped in gold because tungsten has the exact same weight as gold.
Oh, is that right?
And so if you just wrap some tungsten in like gold plating, you can pretty much pass it off as, again, not financial advice, but you can pass it off as gold, because if you weigh it and it looks like gold, it kind of feels like gold, and it weighs exactly what gold should weigh at that size. Then you can pass it off as gold.
Wow.
This doesn't sound as sophisticated. They just used rocks.
Rocks. That's right, yeah.
Went down the beach, got some pebbles.
Yeah.
Would you like to buy some nickel? Hang on.
I mean,
These look like beach pebbles.
Well, this is the funny thing about it. They're talking about it like bags of stones, and you kind of think like, oh, yeah, right, there's like 3 or 4 bags of stones. Like, I can understand how that happens. But I did the maths, $1.3 million worth of nickel. Want to guess how much weight of nickel that is?
Oh, I don't know, 50 tons?
Yeah. Hey, look at that. 52 tons.
Really?
Yeah.
Oh, 52, is that right?
Yeah.
I tell you what, I know my nickel.
Yeah.
I might not know much about financial markets, but you asked me to weigh some nickel. I'm your man.
Yeah. Yeah.
Right,
but
50 tons, okay.
So it's 52 tons of nickel that has been swapped out for bags of stones, apparently.
Right.
Yeah.
There's a pebble beach somewhere that's now just a beach, so that's good.
A reason I find it interesting, like I saw this story, and then so the London Metals Exchange has scrambled, and they've done a full audit of all of their warehouses and announced that everything looks okay.
Just imagine some guy in there just going nickel, rock, nickel, rock. The full audit. It takes a while to work through 50 tons of...
wouldn't it?
Yeah.
Yeah. So...
Right, sorry, they did a full audit.
Yeah, the full audit. So, and they're saying now that everything's fine. But the reason when I first saw this story, like, it piqued my interest pretty hard because, like, commodities are pretty central to the global economy, obviously, because you use them to make stuff. But they're also, like, they're a highly leveraged, highly traded market. So, there's a lot of trading on futures of commodities. A lot of trading happens well before any physical exchange. It's why it's all in warehouses, because most of the trading happens without any actual physical exchange.
Right, is transfer the ownership.
Yeah, that's right. So it's
like an NFT.
Yeah.
This sounds like it has all the same governance of the NFT market as well.
Yeah, so it's a financialized sector, and it's very important. And look at it and think like, okay, this has the potential. Just because of the timing, just because everyone's faith in the financial system has been rocked because a whole bunch of banks have collapsed, it has the potential to be the kind of black swan event that just tips them, that just generates a really disproportionate response. Because the London Metals Exchange is the premier commodities exchange in the world. Right. If you come out and say we've got no faith that anything that's happening on the exchange is what we think it is, and that the commodities market kind of wobbles. Everyone looking at that, going like, hang on, the US banking system's collapsing, banks are going under, the commodities market's gone to crap. Like, this is a global financial crisis. It's on. And so I think it was an interesting story for me, because I just think we're at this interesting pivot point, like with a number of banking collapses, that something like this, like if this had happened in 2020, 2021, and people would have just laughed it off and been like, oh, weird, they should have got into blockchain, idiots. But
yeah, right.
Just because of where we're at right now, it has the potential, I think, to trigger a serious meltdown. And I think that's true of everything. And we're very focused on the US financial system, but like something like this going off in a major center like the London Metals Exchange, or like maybe a major exchange in Asia, like maybe the Adani story blows out and the Indian stock exchange gets, people lose faith in that. Like it could we're in a risk off kind of phase. Everyone's a bit scared. Everyone's a bit worried about what's going on. It doesn't take much in that environment to trigger something pretty major.
Another straw on the camel's back, so to speak. I wonder if this is maybe why my father-in-law, he just manages his own commodities. He's got stores of lead that he has at his house for some reason. I remember when he moved house, we kept hold of his stuff for a while they were between houses. He just had all these bits of lead. I'm like, what's this? He's like, that's lead. And I'm like, why have you got lead? He goes, that's good lead. Because I'm like, can't we just throw out this junk metal? He's like, nah, that's good lead. I'm like, what are you talking about?
He's smart. It's like
he's keeping it out of the exchange. No one's pulling the switcheroo on his lead.
Not your bag, not your lead.
All right, why don't we take a break here, grab a word from this week's sponsor. Coming up after the break, we're going to look at herd behaviour thanks to IG and also Korea's 69-hour work week. Back with more Comedian versus Economist right after this. Welcome back here on Comedian versus Economist, and this week's episode is brought to you by IG. IG has a great platform which provides enormous amounts of information and guidance on how to be a better investor, but they also want to teach investors how to master their mind to avoid the problems that beset even the best investors. So Thomas, you were reading a piece on IG's Master Your Trading Mind hub about herd behaviour. Would you recommend reading?
In general, yes, I'm a fan. I know. I know you.
Interesting.
You're a bit set in your ways, but I think you should give it a go.
Well, a lot of people read, and I'm not one to follow the pack, Thomas.
No. That's all right.
We're going to talk about herd behaviour. I think people are maybe just copycat reading. And I don't know. They're all learning too, I hear, which I'm not down with.
Yeah.
So,
do your own ignorance. I mean, for sort of following on what we're talking about, like I feel like we're in a very herdy market right now. Like I feel like we're seeing a lot of herd dynamics play out. Like you saw the collapse of SVB Bank, Silicon Valley Bank. That was a bank run. That was a total herd movement. Once the bank was solvent, it wasn't a real problem until people started freaking out and everyone wanted to get their money out. And so it was an old school bank run like that sense. So that was they got trampled by the herd. So the herd's active there. Then the other thing is that, you look at what sort of happened in response to that. So Bitcoin's pumping at the moment.
Oh, really?
Yeah. Yeah. Well, it's up.
I'm going to get on.
Yeah. That's right. If you take one thing from this break,
it's buy Bitcoin.
Yeah.
No, don't do that. Not financial advice.
So the herd's moving into Bitcoin. And then you look at this and you think, like, kind of why? And then, like, Lisa Wade, the chief executive of Digital X, it's like a crypto platform in Australia. She's saying banking failure means more money will be pumped into the system and traders are getting ahead of that. And so the idea is that there's sort of a liquidity story, and so, the Fed's pumping more money into the system and just to prop up the banking sector, and then some of that's going to flow into Bitcoin. So that's a bullish signal for Bitcoin.
Right.
At the same time, she's also saying that the collapse of the financial system is proof case for what Bitcoin was designed to do, which was to protect your money and act as a hedge against financial collapse.
Against collapsing banks, right?
Yeah. So that's the other narrative in the market. Now, both of those narratives can't be true. Like it can't be a store of value and a risk asset.
Yeah, right.
But that inconsistency hasn't stopped Bitcoin before. But basically,
it's no secret that you're not Bitcoin's biggest fan.
No, I'm not. And the point is, like, there's just news stories that the collapse of SVB and the troubles that flow from that creates two news stories. Both of them are bullish, which is enough for the herd to go, all right, it's on. Let's pile back into Bitcoin, and that's what we're seeing with the lift in Bitcoin.
Any coincidence also then that GameStop jumped 50% last week?
Yeah.
Because I did see that they posted profits for the first time in like forever, but. This feels like the right kind of climate for GameStop to do well. If Bitcoin's having a rally, then it kind of goes hand in hand really with stocks like GameStop that may be a bit more speculative.
Yeah. That's right. GameStop did have their first profitable quarter in 2 years, beat earnings per share beat expectations by 220%. So good strong result. Not enough to really justify a 50% jump in share prices, you would think, alone, But yeah, that's the nature of the herd. The herd gets a good bullish signal, and they're like, "All right, it's on. Let's go."
It's on like Donkey Kong. So as a trader, like how do traders protect themselves from the herd? I mean, I don't know. Like, there's two ways I think about it. One is, join the herd, get on board, see if you can get out at the right time, which is obviously risky. But the other one, as you say, like, you don't want to get trampled by the herd either. So, how do you kind of play it?
Yeah, I think this is what I was taking from the IG article I was reading. Like, kind of the key thing is you just need to be conscious that you're in a herdy market or not. Like, if you're in GameStop, I think most people trading GameStop are aware that there's a herd dynamic at play. I think the only
you reckon?
Yeah.
Do you think the people that are buying Dogecoin are aware there's a herd dynamic at play?
Oh, totally. It's pure herd. Dogecoin is the perfect herd. Is a pure herd asset.
Right.
You're only buying it because you think other people are going to herd. You think the herd's going to keep pushing it higher, and so I think that's where you get into trouble. Like, if you're getting into a herd asset and you're seeing GameStop's on the rise, you're like, oh, cool, must be some really good fundamentals there. I'm going to get behind those fundamentals. That's where you get burnt because the herd runs and then it turns. The number one, like the biggest thing is just being aware and conscious of this herd dynamic and its effect, and learning to see when the herd's at play. And when you're investing, like, if you're investing in a blue chip stock like BHP or something, then you can kind of be confident, okay, there's not a herd dynamic here, and that's how I'm going to trade. But if you're in something more like a GameStop, then you just need to know that, there's a herd dynamic here and the herd could turn, and I've just got to be alive to that. I think that's the number one. That's the number one thing. The second thing is that you just got to be really cautious about this simplistic reporting. So, like, you always see the headlines, like I've seen different headlines. Bitcoin pumps because of Fed liquidity injection.
Yeah.
And that sounds perfectly reasonable. It's a very simple story, very neat. Got it. Awesome. But then there's other headlines that say Bitcoin's pumping because the financial system is finally collapsing. Again, it's a very coherent, rational, logically consistent story, and it's very neat and it's very simple. But those two simple stories can't both be true. Like they're not true, and we see this. You see this a lot with financial reporting. It's this really oversimplification. ASX rises on Fed concerns or something. It's like the ASX market is really deep and really broad, and there's so many different companies doing different things that they aggregate out at a 1% rise or whatever is never going to be down to just one factor. Do you know what I mean? But financial reporting always presents it this way because it wants to tell a simple story.
Yeah.
And you never see financial reporting that says ASX goes up 2% because herds are crazy.
The real headline I'd like to see is ASX went up because the US did overnight.
Yeah.
That's because it's, 9 times out of 10, I think someone even did research on this, that it just kind of followed the US almost all of the time. So rare that it's going the other way. Rare that it bucks the trend of what happened overnight in the US.
So I think particularly for when you're coming into it and as a new trader, you just need to be really conscious of this element in the financial reporting, that there's this real tendency to oversimplify a complex market and distill it down into simple messages, which are, may be partly true, maybe not. Particularly for herdy assets, you need to sort of just watch for that.
So I guess ultimately it boils down to still do your own research and don't just go on what you heard. Sorry.
Yeah. And the other thing in the article, which I think is really good, is having a trading plan. Like before you enter a trade, know what you're going to do. Keep a trading diary, which is something that I started a few years ago, which I'm finding really valuable to when you make a trade, jot out ahead of time what you're going to do, what you're looking for, what your exit is. Have a bit of a plan and stick to that, and then you're not going to get so caught up in the herd story.
I did a plan. It was more of a picture. I drew a Bitcoin down the bottom, and then I drew an arrow that headed up diagonally and pointed at the moon.
Just a little stick figure man driving a Lamborghini.
Wouldn't recommend. All right. Well, for those who are ambitious and ready to put in the work and improve their trading, it's time to step up from the entry-level platform to IG. IG is where traders are made. So search Master Your Trading Mind or head to the Master Your Trading Mind hub on IG.com to find out more. All trading involves risk. Issued by IG Australia Proprietary Limited, ABN 93096585 410 AFSL 515106. All right, Thomas, finally on the show, there's a bit of a fight about working hours in South Korea. Are they trialling the 4-day work week as well?
No, they're trialling an 8-day work week. So see how that goes. Yeah. This is.
I'm no maths expert, but I see a flaw in their 8-day work week plan already.
Yeah. No, I mean it's a funny story. Everyone's sort of talking about working less. Korea's gone the other way, and so they had a maximum work week of 52 hours. And then the conservative government came in and went, actually, we want to increase that to 69 hours.
Was it a joke? Did they announce it on April Fool's Day by any chance?
I know. I was trying to figure out that 69, where they got from. Maybe they just maybe it's that 69.99. Everyone thinks, it's not 70.
Bargain.
I mean, Koreans already work some of the longest hours in the world. So they're the fifth. They have the fifth longest working hours in the OECD. So so they're quite, they work, the average citizen works 1,915 hours a year. That compares to the US, it's 1,700. So quite a big difference there. Yeah, so the fifth in the world. So they work hard, they work long already. They've actually they have a word for death by overwork called guarosa. It's such a problem. Yeah, they had to invent a word to describe getting killed by working too much. The Japanese have a similar thing with karoshi as well.
Well, I guess, you do need to have a word for it because death by overwork just sounds pretty horrible. Whereas guarosa seems kind of exotic and interesting. Oh, I'd like to do that. There'll be like hipsters just going like, I'm going to Korea to experience guarosa.
They've got an overworking story anyway, and then the government's come out and we need to work more. We want Koreans to work longer hours,
right?
Yeah, and then young people just went like, no, like this is terrible. And then you had such pushback on it that they've now scrapped the policy. And gone like, yeah, we're not. I can't
believe it was just young people though. Like, is this really a millennial thing? Like, they are the only ones that were like, I don't want to work
myself to death,
70 hours a week and work myself to death. Like what older people were okay with it? Like, this surely isn't a young people story. Surely this is like everybody who was a worker in the workforce is just like, yeah, I'm pretty happy not to work that much.
Yeah, I don't know. I mean, maybe. I mean, this is the thing, like the government came out and said they're taking it in quote, a new direction, which has mean just killing it, and said that we need to attempt to communicate better with the public, especially with Generation Z and millennials.
Right, okay.
Yeah. So they're blaming Generation Z and millennials for not understanding the communication that they were offering.
I did see the quote from South Korean President Yoon Suk Yeol. He came out and he said workers should be allowed to work 120 hours a week and then take a good rest.
120 hours a week.
120 hours a week. See, he's offering rest. He's offering rest and recuperation after you drive yourself into the ground.
Yeah.
Right. So is it likely to succeed? Do you know?
Oh, no, it's not getting up. I mean, I think young people are waking up to, and I think it's sort of like because they're a bit more tuned in.
Not if they're working 70 hours a week, they're not waking up.
Yeah, but I mean, they're connected in it. They're seeing the way other people live. And I think it's reasonable to ask, like, why are we being asked to work 70 hours a week? Particularly, I think, we should be asking the same question in Australia. Like, for all the technological advancements we've had over the last 100 years or so, we're working longer hours than our grandparents did. So all that technological innovation, none of it has gone into working less.
Yeah.
And I think it's reasonable to get to the point, particularly as with South Korea's like come out of was a developing country. It's now pretty much a developed first world nation. To be like, okay, when do we stop? When do we stop killing ourselves to grow the economy? And when do we start living? And I think that's a question that young people everywhere are asking. It's like, see their parents working hard and killing themselves. And so like, what's the point? Like we've reached affluence. We're not beset with hunger and poverty. When do we go like, enough's enough, let's build a bit more leisure time in?
And I think also young people are asking the same question now of ChatGPT, and ChatGPT is saying, it's okay, I'll do it. To which everyone's kind of happy. Until we've got no money because we haven't got any jobs. All right, why don't we leave it there? Thank you so much for tuning in once again. Don't forget, FinFest this year, 2023, is locked in November the 11th at the Carriage Works in Sydney. We hope to see you there. That's it from us this week. Thank you so much, as we say, for tuning in. We will get to your emails next week, so keep them coming. CVE@equitymates.com via email, or you can send us a message via Facebook and Instagram @CVE Podcast. But for us, for this week, it is bye for now.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.